Good morning, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, January 9th of 2023. Look at this. This is a very bullish day as continuation from Friday. If we check the daily, look at this. This is Friday, and we are continuing higher, accepting pricing higher than last week high, that is this blue dot line, and actually hitting right now this 11,384 pivot on the day. Look at these two big green candles, and this continuation is also very beautiful on the 30-minute chart, in which we were consolidating here in this range and we broke on Friday, and we are continuing higher until we have just reached this daily pivot and also 30-minute pivot. That is quite important. So I expect a little bit of pullback right here, but as of right now, today is a very, very bullish day. I've seen a lot of buying on the pullbacks, and point of control is just at low day. Point of control is just as this pullback, and look at this. Tesla is 8% in the green. Apple and Microsoft are both, this is beautiful, 45 EMA being respected in all three main stocks today. Tesla is actually hitting resistance up here at this point of control, so be careful here because we are seeing some sellers stepping in and lower highs. But apart from that, we reach this red line, the 30-minute pivot in here, and also the daily pivot right at 11,380. So congratulations if you were long. We initially spiked, we test the bottom, and we start seeing these weeks to the upside, and we just ripped, consolidated, and we are slowly grinding up. So apart from this, at 18 minutes ago, we got consumer inflation expectations. So the expectations from the consumer is that inflation is going to be lower. So as you can see, consumers see inflation and spending cooling off. So declined to 5%, the lowest level since 2021. And this is far from the Fed's 2% annual inflation goal, but it represents progress. And this progress and these expectations are key in order for businesses and the overall economy to pull back. So as you can see, 1 year expectation got hit a record of 6.8, but consumer expect gas prices to increase 4.1 and food prices to 7.6. So both gas prices and food, they expect to continue high, but lower than before. And the 1 year outlook for household spending stumbled a full percent point to 5.9%, the lowest levels in 2020. So this is key to understand. This is not that inflation is going down, it's just that the consumer are expecting lower inflation. So they are willing to lower spending, to lower their consumption into the economy. So that will oblige the businesses and all the rest of the sectors to pull back on the prices, and also labor market will start to cool off, offering lower wages, so less money into the economy, lower spending, and that will take into account in the upcoming months in the lower CPI. So this is not data, this is just expectations from the consumer. So this is something to take into account, because apart from the continuation from Friday, I mean, we've seen this market structure change. So in the daily, breaking this pivot is key, because we broke to the upside in this range, and most probably all the pullbacks in this range are going to be met by demand. So be careful, short sellers, because this is looking good for the bulls. There are a lot of levels up there, but right now we are just at this daily level after these big green candles, and we are just going to watch from now on a lot of buying pressure. And look at this point of control being respected, and in the 1 minute chart the 45 EMA is showing strong demand. So what else apart from Tesla, Microsoft, Apple, all green? Well, crude oil is 2% in the green. So don't forget about that. We are expecting higher pricing in crude oil, and natural gas did pull back quite a bit. We are just seeing a little bit of a bounce from 4, but look at this. This is just super bearish. So the only thing that we might see issues in the future for inflation is gas prices, crude oil prices. So watching this, and with all the expectations in the future from the consumer and from the business, we might see nice moves to the upside. This for sure is holding these levels and breaking up from this range is actually quite important. Dollar in the red, breaking down. I was expecting this, and the next level is 101. Yields are pulling back. Look at this. This is quite an important level. I'm going to show this, mark this level of support. It's quite interesting. I think this is going to be bought up. So all yields pulling back, and look at the expectations, 4.83 on the yields. So as long as the expectations remain lower, that will mean that Fed is going to be happy and is not going to increase as much the interest rates in February. This is causing all the yields to pull back because these expectations from the consumer, and seeing that consumer is not willing to spend that much, so businesses are going to need to lower prices, and that would bring all the overall prices and overall inflation down. So this is already pricing in a lower inflation in the future, and most probably the Fed is going to be quite happy seeing data. Don't get me wrong, this is good news, but we need actual data. This is just expectations. We need to wait for this week economic calendar to show us CPI. This CPI is from December, it's not from January. We are hoping on Thursday to see way lower inflation, both general and also core inflation. Perhaps a little bit of core inflation month over month from 0.2 to 0.3. But overall, this is December, and most importantly, we are expecting to see lower inflation month over month from now on until the Fed's rate hikes again in February. So let's take a look. What are the expectations for that? In 23 days, we are going to see. So I remember last week on Wednesday and Thursday, we were 60% probability for 25 basis points. We are spiked to 77. So a lot of people are pricing in 25 basis points, only that, to reach 450 to 475. That's why we are seeing yields pulling back and futures on the yields also pulling back, because the terminal rate is going to be lower. So look at this. We are still pricing in 4.8 in April until September. So raising 25 basis points in 23 days in February is going to put 450 to 475, and maybe another hike in the next round to reach the 4.5. But super important, this week's Thursday CPI data is going to be super interesting. So Nasdaq, let's go back and do the final remarks. We are still super bullish. Look at this, still doing higher lows and higher highs, still looking quite bullish. I would mark this. Look at this. This is going to be quite interesting to see if we break this support. We broke also this one, the first one. We broke in here, but we just bought the pullback on these pivots and the previous support. And it's quite technical. Nasdaq today, S&P's is also just going higher and higher, perhaps losing a little bit of steam up here because we are now reaching critical levels in both Nasdaq and this pivot, and also S&P's is reaching these weeks that we got on 3900. So S&P is also looking super bullish. This is going to be critical for this week, this daily level at 4043. But as of right now, we are quite bullish. So that's all for today. Congratulations, bulls. If you were long, you did pretty well today. So thank you for your time. If you found this video useful, please remember to click the like button and subscribe. Remember that I upload new videos every single day for market forecasts, market updates, and market recap. I appreciate your time and see you in a couple of hours with the market recap. The trading day is not over yet. Remember, we are still super bullish, so manage your position, take some profits, and just lock some profits and enjoy the rest of the day. Discipline and risk management are key for your success. Stay safe, everyone.